Welcome, ladies and gentlemen, to Commodity TV here at the PDAC 2025 in Toronto. And we are moving straight forward here with Calibre Mining. And we have Ryan King here with us, the Senior Vice President, Corporate Development and Investor Relations, because a lot is really going on here. Ryan, good morning.
Good morning, Johan. It's nice to be here, and thank you for coming by. And firstly, I would like to say I apologize to you because I didn't get back to you quick enough.
That's
but
right.
It's been a busy time over the last 7 days, as you can imagine. A very exciting time for the business, I believe. I think there's a great opportunity here, but great to be here, great to talk to you.
Hey, thanks for taking time, really, because I really appreciate it. I mean, we know each other a long time, and I absolutely didn't want to upset you. I would, more in German, you would say it was like a Kurzschlussreaktion. That's like electrical bypass. Yeah. But it was, I had one good reason for that, only one. Okay. And the reason was, to me, because you had reached my price target in the point and figure chart, which was $3 since 2 years or 3 years. I said that.
I remember.
When the stock was at 120, I said
Yes.
it will go to 3. And to be honest, I'm very strict with my ruling. Yeah, that's why I said I sold, because also I have to say it when I do that. For disclosure reasons. But first of all, sorry for that. It caused a bit of trouble. I understand that, but now you can convince me, and then I promise you, I buy every share back.
Now, one thing I will say is that we all are investors in the business. We're all looking to make money.
That's right.
That's what we're trying to do, right?
And I made a lot of money, by the way.
Well, thank you. Congratulations.
Thank you.
Fantastic
Thank
news.
you.
No. And no, I honor that. I do believe that people have to stick with their rules of engagement. And for you to say that was my point and figure target price, that's great. That's fantastic. And you know, at the end of the day, I'm a significant investor in this business. And we're always looking for ways to create more value for our shareholders. And you had a price target of $3.
Exactly.
Right?
So you made that.
So by doing this transaction, I believe, we all believe, there's a tremendous opportunity to combine these businesses, to combine these teams, to really unlock, probably to also mitigate some risk, but also to unlock a lot of value for the combined shareholders. Now, people have asked me, why did you do this now?
Would be one of my questions. Absolutely. Because I got that question 20 times last week.
I'm sure you did. I got it a few times myself.
Yeah.
But you know, these types of transactions for these bigger entities, they're very hard to announce, to even get the combinations together. They're very hard to do that. And so timing isn't always perfect, right? We would have liked to see first gold from Valentine maybe. But at the same time, if we take a step back, since we acquired the Valentine Gold Mine in Newfoundland, Canada, Calibre's share price has actually gone up about 125%. And actually, year to date, we've gone up 48% prior to the announcement of the transaction. So the shareholders have done quite well during that period of time. I mean, it all depends on when we bought in. And so there was a good level of re-rating, I believe, as we de-risked the project and got closer to first gold. So, you know, I also believe, though, that the shareholders of Calibre will benefit from when it does see first gold in Q2 of this year, and it gradually ramps up to that nameplate capacity, and then the future beyond that, because we're all part of the business combination. We're all part of the new entity of shareholders of the new company. And I'm reminded of our last transaction. Our last transaction as a group was a company called New Market Gold. I don't know if you remember, but
oh yes, I remember well.
But the New Market team, led by Doug Forrester and Blaine Johnson. Doug Forrester is the lead director of Calibre. Blaine is the chairman of Calibre, and I was involved in the entity. We discovered one of the highest grade underground gold mines in the world in Australia, right? And it was a very exciting time because we were finding higher and higher grade material. And we merged that business in a business combination. No premium, but we did a business combination with Kirkland Lake Gold. And I can recall everyone was very upset by that. Why didn't you get a premium? It was undervalued compared to your peers. All of these types of reasons.
That was also one of my points.
Yes. And the thing is that we believe by putting those businesses together, we could unlock more value We could diversify the portfolio because mining is not an easy business.
Nope.
They're always running into challenges. And so by doing that, there was an opportunity to, and in our view, see a re-rating. And after that transaction happened, and it took a little bit of time, 12 months later, I think even 12 months later, the stock was up 100%. And if we look back, I think it took about 2 years, maybe 3 years, but just on the core of those assets, that stock went up 10 times for shareholders, which allowed then Tony to do a deal to acquire the Detour Lake asset, and then he was eventually acquired by Agnico Eagle. So when we look at this type of a transaction that we've done, I believe that there's a great opportunity in front of us for shareholders. I believe that combined with the core Greenstone asset that is going to be 350 to 400,000 ounces a year in Canada, and the Valentine core asset in Canada will be another 200 plus thousand ounces in Canada. This is the second largest gold producer in Canada with those combined assets.
And both are financed to finish the mines, right?
100% financed. Okay. Yes, we are fully financed. And in fact, we did do, as part of the transaction, we did a $75 million convertible debenture, of which Equinox Gold participated 40 million of that 75. Now, what was the reason for doing that convertible debenture? People say, well, you were financed, you didn't need the money, we had cash on the balance sheet, which is true. However, from announcing a transaction to closing could take up to 6 months. It could take up to 6 months. And during that period of time, it's very restrictive. It's very restrictive to raise additional capital if you need it.
Yeah,
right?
That's right.
So we did this as insurance, because remember, we're starting first gold in Q2. So that will transpire during that period of time. As insurance, we know that, okay, we have the capital we need just in case something happens. Now, I assure you, as of right now, we're on track, we're on budget, we're on schedule. There's no issues with the asset, none whatsoever. In fact, I'll show you a video in a minute of some of the motors being put in. It's really exciting times. But yeah, no, I think that I think it's going to be a tremendous opportunity for combined shareholders.
Okay.
As chair, Ross Beatty is very well known in this business, and Greg Smith being a chief executive officer, but also the combined team, right? I think that's a part of this business combination that I think will unlock a lot of value. With Darren Hall's experience as an operator, operating these large, low-cost, long mine life open pit mines, this is what Darren has done his whole career. And I believe there's an opportunity to underpromise and overdeliver and create a very strong, financially robust product. And especially when you look at the combined company, we will be producing 1 to 1.3 million ounces, and that's the analyst consensus numbers for 2026. These are big numbers.
That's right. Yeah.
And especially if you're run by an operator that has done this most of his career, 30 years at Newmont, and his role there was optimizing assets and delivering assets. He represented probably 50% of Newmont's EBITDA. So a pretty significant key role within that organization, and he will be leading all of the operations as president and COO of New Equinox Gold.
So, okay. Super. Well, you are convincing me. No, that's perfect. What do you think might be the AISC basis for this combined 1.2 million ounces?
Well, that's a great question, because as we bring on and realize the full value from Greenstone, as it gets to full nameplate capacity, and as we bring on the Valentine gold mine, this will lower the overall company's all-in sustaining costs. So I believe next year we'll have lower costs as we see that realization of those costs. This year it's probably around $1,500 an ounce.
Yeah, still a super margin.
That's a great, like Calibre alone is $1,500 to $1,600 an ounce this year. But that doesn't include any production or costs from the Valentine mine. So we haven't given guidance for that this year. So we anticipate to give guidance upon first gold in Q2. So with the Canadian assets bringing down the all-in sustaining costs, increasing the production profile, I think that is going to also have a positive impact in the overall combined company. As we look forward to the future, especially now, 2025 will be a strong year with the combined companies, but 2026 and beyond gets even stronger. And possibly we look at the whole portfolio. Once Darren has some time to get in and look at the assets, understand the assets, maybe there's some rationalization to be happening in the portfolio. because the company really, I believe, is stronger together with the combined team for a re-rate and a new significant, predominantly Canadian gold producer.
Absolutely. So that means you think you can lift some more synergies on the one hand. On the other hand, do you see in the foreseeable future dividend payments? Because that would, for me, then be the logical way.
Well, companies of this size and a return to shareholders is probably something that would be, I think, a priority for the combined company. I can't talk for the combined company at this point in time, but as they continue to optimize the portfolio, deliver. I mean, I believe that the real focus coming out of the gate is the integration, a smooth integration, but also looking at the portfolio, looking what could be done with the portfolio, because what Calibre shareholders also get in this transaction is incredible growth opportunities. So there's a Castle Mountain asset in the United States going through a phase 2 permitting process. That could be another 200,000 ounce a year production profile, and that's a 5 million ounce resource and reserve base.
Oh, okay.
Then you've got an asset in Mexico called Los Filos. There's 12 million ounces of gold there. You'd have to put in some capital for those two assets to unlock that value, but you're looking at a combined 400 to 500,000 ounces of growth potential beyond that 1.1 to 1.2 million ounces of gold.
Oh,
so
wow.
I believe there's a tremendous opportunity for us. And actually, the analyst at Scotiabank, his name is Ovais Habib, he ran all of his numbers, and he has this 45% accretive to Calibre shareholders, right? Now, obviously, that's going to take a bit of time, as these things always do. They take time to go through all the asset bases, especially for Darren and the whole operating team, to analyze those. What is going to maximize cash flow? Once we do that, it'll be delevering the balance sheet and then looking at returning capital, I'm sure, to shareholders. But that'll be something in the future for the board of New Equinox. But again, doing this together, this will mitigate risks and unlock more value for all combined shareholders.
Okay, super. The relation of becoming 0.31 Equinox shares for every Calibre share. This is something fixed. This will not be changed.
At this point in time, yeah, 0.31 for each Equinox share. Or sorry, for 0.31 Calibre share will roll into an Equinox share. Yes, that's correct.
Okay, so I need 3 Calibre shares for 1 Equinox share.
Yeah.
Yeah. Okay, super. Now, because that's important that we have a calculation basis, right?
Sure. Yeah.
Because the fun thing is, I did again last night my point and figure charting. Now I have a price target of $6 Canadian for Calibre.
Yeah, well, I mean, look, taking a step back and we look at the valuation, okay, just for a second. Now, a lot of your audience will be familiar with Agnico Eagle, one of the largest gold producers out there. They'll be familiar with Alamos Gold. So Alamos Gold produces, I think, around 600,000 ounces a year, about 450 to a little over that in Canada. Alamos has been around a long time. They've got a track record. But Alamos has, I believe, a 14 billion Canadian market capitalization for that, roughly 600,000 ounces of gold. Because they've increased confidence, they've continued to deliver, and they've built the trust up of the market as a solid, robust gold producer. Here's the opportunity for New Equinox Gold. And I say that because coming out of the gate, I was just doing the numbers. Combined company today has a market capitalization of 6.8 billion. 6.8 billion. And remember, 600,000 ounces from tier 1, long life, low cost assets in Canada. Then we've got another 400,000 to 500,000 ounces plus outside of that. So we're talking about a company that is going to be generating very significant, at current gold prices, incredibly significant EBITDA. And in 2026, even bigger.
That's fast.
So I believe you look at that valuation versus, some of the peers in that category, and you go, well, there has to be an opportunity for shareholders to realize additional value, particularly as we re-rate from the Greenstone asset and then the Valentine asset and see the full production profile. I look at that as a very attractive opportunity. Personally, we are all big shareholders of the company. Like we believe that there's a real opportunity here to see value increase. And again, I think it's really important that and yes, I know when we have these business combinations, a lot of people think, oh, it's a liquidity event. Oh, but I didn't get a premium. Yes, but
I thought in the first instant the same thing. I was like, hey, what's going on here? They're giving this away.
Right. And what I would say to that is we're not selling. We're combining these teams. We're combining these businesses to create a better product that in time will unlock a lot more value for shareholders as this business grows and delivers upon that annual gold production. And I think that's really critical. And one of the reasons why Alamos and Agnico have such great valuations is because they've got such consistent delivery, under-promising and over-delivering. And I believe under Darren Hall, that will be the case. Under his oversight of all of the operations, that's critical to delivering upon expectations. And I think that's where a lot of value will be unlocked.
Fantastic. So your next two key deliveries are Valentine, bring it in production, and I think Greenstone hit already now production, right?
Well, so yeah, they started production at Greenstone last year.
Yeah.
And it's still continuing to ramp up to nameplate capacity. So on that, again, with Darren's involvement in that, I believe they'll be working towards getting to full nameplate and unlocking the full value of Greenstone. So Calibre shareholders will benefit from that. And then, of course, Calibre shareholders will benefit from then adding the Valentine to the production profile. So it's a combination in Canada, but then it's also the upside potential that comes from all the other growth assets in the portfolio.
Yeah, that would explain my $6 target for Calibre.
Well, I really do think there's potential here.
Yeah.
Right? I mean, when you look at I take a step back and I just look at the combined team, the combined asset base, the gold environment that we're in, right? I think that the future is very bright together. And yes, I mean, people would have liked to see a premium. I understand that. But the premium will come as in the market. The premium will come by the delivery, the exploration upside, the growth potential between these two combined assets. That's my view.
Okay, super. I think you convinced me.
Well, it doesn't happen overnight. Sometimes these things take some discussion.
Time. I have no problem with time. Absolutely not.
Well, and some people would say to us, well, this should have happened sooner. You would have re-rated sooner than, and that may be true, but I keep coming back to we've had a good run over the last little while. So we've probably got some of that re-rate already built into the equity. Yeah. Right? So, but no, there's good upside from here.
Super. Okay, then we will see the upside. You over-deliver. As you always under-promise, that is good.
Yes.
And I like to see that. Thank you very much. And honestly, you convinced me. I think I have to buy back some shares.
well, I mean, honestly, through this transaction, when there was a bit of weakness there, we all internally started to look at, well, maybe it's a good time for us to buy some more shares.
Yeah, it's not the same when I studied the chart last night.
Well, and it's one of these things where change is always difficult. Because you've had this track record, you've had this team, you understand, so that now is an opportunity to paint a new picture, to create a new vision of what the company will look like. Super. And especially while we're in this really attractive, robust gold price environment, size matters. Scale is going to start to really matter, and but to maximize cash flows, maximize margins, not just growth for growth's sake, but to create more robust, financially secure businesses. And this is an opportunity with Calibre and Equinox.
Absolutely. Buy back shares and pay dividends.
Hopefully in time, right?
Super. Absolutely. Ryan, thank you very much.
Thanwhat you.
All the best for you.
Nice to speak to you.
And I really like your paint a new picture. That's what I have to do now with Calibre.
Well, that's what we're here. That's what we're about. It's regular communication with our shareholders. I encourage everyone to reach out, ask questions. Let's talk about this transaction. And us as Calibre shareholders, we are big shareholders of this business. We care about the future of the business, and we care about the future. It's all about creating wealth for shareholders. That's what we're here to do.
Super. Let's do it. Thank you very much, Ryan. All the best for you.
Excellent. Thank you.
Yeah, ladies and gentlemen, that was Ryan King, the Senior Vice President of Calibre Mining for, of course, corporate development and investor relations. And to be honest, let's paint a new picture. I think I have to do that now. Definitely, I have to excuse myself. I was maybe a little bit too early and too fast when I said I sold my shares. I sold them definitely because I hit my price target in the chart. But last night before the interview, I went again through my charts, and now I have a $6 target, which is really funny enough. And I must say what Ryan was telling me here in the interview, and what we will talk also after the interview for sure. I must say, I was wrong. I did a wrong decision. So I'm buying back. Very simple. Have a look at Calibre Mining. Have a look at Equinox Gold. The combined company is a real burner, I can tell you. Thanks for watching us. Bye-bye from Toronto, from PDAC 2025.